Hi, I'm Ben Clark, President and Principal Broker of Homebuyer Representation in Salt Lake City, Utah, and the President-elect of the National Association of Exclusive Buyer Agents. I'm super excited to share with you some information that I found regarding the Utah economy and the housing outlook for 2025. Being an exclusive buyer's agent, I try and make sure that my clients have all the information they can to make good decisions and so that I can give them good advice. Here's a bunch of the cool stuff I learned. Well, first, there are three main questions on every buyer's mind. Why are the interest rates so high? Why are home prices so high? And should I buy now or wait? And also, one of those questions, that last one, is really, will I ever even be able to afford a home? And we'll talk about that today. First, why are interest rates so high? Well, we had a huge spike in inflation, and the Fed raises interest rates to curb inflation. When money gets more expensive to borrow, that cools spending and demand. And they're hesitant to raise rates again anytime soon because while inflation has come down, it's still at about 3%, and they want it to be closer to 2%. They want to make sure that the economy is stable before they make a move, because if they do lower rates too soon, we're still not in the habit as consumers of holding back, and we'll just cause prices to go up. We'll pay for things and the prices will go up and inflation will go up. So why are mortgage rates so high? As the Fed does not directly affect mortgage rates. They raise a short-term rate, not a long-term rate. Well, mortgage rates were low for so long because the Federal Reserve kept their benchmark rate near zero. And in addition to that, they bought trillions of dollars in mortgage-backed securities to stimulate the economy. That made borrowing cheap and encouraged people to buy homes, invest, and invest in their businesses. And it just contributed to a lot of spending and economic growth. Well, once inflation surged, the Fed had to reverse course, and they had to do it very aggressively. So they stopped buying mortgage-backed securities and they raised that federal funds rate super fast, and that caused mortgage rates to also climb. Let's take a look at that. Okay, here's from 1960 onward. You can see we had periods of inflation in the 70s and 80s, but mainly under control here in that 2 to 4% range for most of the time. Actually had some deflation here, but it spiked here in 2020. And due to COVID and other things, they had to get that under control. So again, they're shooting for a 2% target. We're currently at about 3%. And they raised rates. They put on the brakes harder than they ever have before. The rates were raised higher and they were held higher longer than ever before. And just recently they did make a rate cut, but actually inflation started to creep back up. So we'll see how long mortgage rates and other rates are held high. But there is hope that they will start to trickle down, but they're hesitant to cut rates until that inflation gets under control. So they have two main mandates. One is to keep inflation under control, and it's currently up here at 3%, and to keep unemployment from skyrocketing. And right now, unemployment's right where it needs to be. So the current unemployment rate is right at 4%, and anywhere between 4 and 5% is considered full employment. So that's good. Okay, wages have lagged behind, but wage growth is still higher than the average wage growth. The average is about 3.1%. We're at 3.9% in January 2025, and it is outpacing inflation. So again, here's that huge spike in inflation up to about 8%. Wage growth did not follow that spike. Wage growth takes a lot longer to occur. So inflation has come down. Wage growth is higher than inflation, but it's going to take a while for the wages to catch up with the inflation that's already happened. So again, just a reminder, the Federal Reserve does not set mortgage interest rates. The mortgage rate is a very long-term rate, 30 years, and it follows other long-term rates. The closest one that it follows really closely with is the 10-year Treasury. And you can see that when the Fed cut rates in September, mortgage rates actually went up. So they're not directly related. Here's the 10-year Treasury. It's the safest investment in the world. It's guaranteed to be paid out every 10 years. The reason that the mortgage rate is also a long-term rate and it follows essentially the same path, but it has a little bit of a premium on it. And that's because home buyers or homeowners with a mortgage can refinance the mortgage or sell their home. So it likely won't be held for the entire 30 years most of the time. And so investors want a premium on that because they don't know how long the investment will last. Okay, there's a spread, like I said, between 1.6 and 2% between the 10-year treasury and the 30-year fixed mortgage. It's normally in that range there, pretty tight spread. It's currently at 2.5. So it's a lot higher than it normally would be. And there is room for interest rates to come down if that spread narrows. Economists are suggesting that that is a possibility, but it's been spread for a little while now. So we'll see if that happens. This is already old, but there have been in the last week lower interest rates every day, just a tick lower, a tick lower, a tick lower. And yeah, so interest rates change could happen at any time. But the expectation is that they won't drop significantly quickly. And that's a good thing. And we'll talk about why in a minute. Well, right here. Do we want to see lower interest rates overnight? I mean, obviously, if you're a buyer, you would think that that's what you'd want. But what would happen if they lowered rates significantly overnight is that it'd be 2021 all over again. All these buyers would come into the market all at once. And even though there is more inventory, there would be more competition for homes and those prices would get pushed up. There's a lot of people doubled up right now and that want to be in homes, that are saving to get into homes. Okay, let's talk about the 30-year fixed rate mortgage. I didn't really understand this fully before, and I've been in this industry for 30 years. I knew that a lot of other countries had variable and shorter term mortgages, but what I didn't know is that the US is the only country in the world where a 30-year fixed rate mortgage is essentially the most common, the standard mortgage. There is France that has some longer term, but just tend to, they can actually go to 30-year, and Germany, 10 years is the most common, and they can do larger as well. But those longer terms in other countries aren't as attainable as they are here. They cost more money up front and or in the rate. So the US mortgage system, that 30-year rate is the envy of the world. You can't get that in other places. Josh Romney with Intercap Lending said the amount of wealth that can be created with a 30-year fixed rate mortgage is incredible. Nowhere else in the world can you lock in debt at a 30-year term where if rates go up, you're locked in. So something to think about. Okay, another little tidbit here is homeowners have more wealth than renters. A lot of renters say, well, I'll save, and then I'll buy when the homes come down. Again, generally doesn't happen. And most of the time they end up renting for a lot longer. And the median net worth between owners and renters, the difference there is $405,000 currently. So homeowners just have a lot more wealth than renters. Let's talk about housing. So in the United States, household formation, about 1.9 million new households are formed each year. People get married, people, whatever. There's households that are formed. People move out of their parents' house, they want to be on their own, and they are now their own household and they need a place to live. The number of houses being created, only 1.36. We're about 500,000 homes short per year, and that's actually been going on for a little while. So there's a huge shortage of housing supply in the country, about 2 million, I think it is. So for a long period of time, we had an oversupply of housing, both for sale and for rent. And then now we have an undersupply. And the renting market is big as well, because people who are scared off of getting into the housing or can't afford the housing need to rent. And they're building those. I'm sure wherever you are, you can see they're building lots of multifamily housing rental units as well. So we're just way under supply here. And we have been since 2013. So we've got a backlog to make up for. Also, well, if that's the case, why aren't people buying existing homes? Well, a couple reasons. So a lot of people in an existing home may sell their home or may buy another home because of lifestyle changes. They may need to upsize, if they have more kids, or downsize if the kids have grown up. They may have health or mobility issues and can't do stairs. There's a lot of reasons why people may want to sell, but a lot of them are locked in, they call it. It's called the lock-in effect. And that just means that their current interest rate is so low because they were so low for so long that selling their house and buying a new house today at today's higher rates doesn't make a lot of mathematical sense. So a lot of people feel trapped in their homes. They might want to move to make an adjustment, and some actually are, but they're kind of locked in. It's kind of difficult to do that because stomaching that cost, just kind of like you first time buyers stomaching the cost of what a home costs today versus what it did 5 or 10 years ago. It's hard. And when I bought my first home, I felt the exact same way. Just a couple years earlier, homes were 30% cheaper than when I bought my first home. But another interesting tidbit is many locked-in home buyers are keeping their home when they buy another one because their rate is so low. They can afford to make income on their current home, keep it as an investment property, buy a new home, and so they're taking a home off the market but not putting one back on, and so that contributes to the housing shortage that we're seeing as well. Okay, year over year home sales, there is a modest improvement in sales. I think it ticked down in January, but it might be, or in February, but it should be ticking up this spring. There's just so much backlog, and interest rates again have improved slightly in the last week. So we should see more activity this spring in the market. Now, because so many existing homes have been kind of locked in, new homes are making up a historically high share of overall inventory. And the reason is that builders can create inventory. They typically have had about 10 to 15% of the supply here, 10 to 15% on the new home side. And now they are making up about 25, 26%. So grown significantly the new home market. And we'll talk about home prices again a little bit later. The home prices for a new home, they just can't go down. Builders can't build homes for less money when their costs are going up. They're not going to sell homes at a loss. So another lock-in buyer are the people who have no mortgage, which is actually almost a third of homes out there have no mortgage. And but those buyers also are locked in by capital gains. They've had such increases in their property value that if they were to sell their homes, they'd have to pay huge capital gains. And the capital gains tax exemption has not been changed in over 30 years. And so the National Association of Realtors is underway to make or to encourage that exemption to be changed to kind of keep up with inflation. And that would help some of the at least higher end buyers unload their properties to move up buyers, and then that should trickle down to new home buyers. But it won't help you as a first time home buyer if that's who you are. One other thing about the housing market, that we should see, even in a normal economy, about 200,000 foreclosures per year. We're significantly lower than that right now. And one of the reasons why, even though home prices are high and interest rates are high, that people aren't getting foreclosed on is that you have to get qualified to get a mortgage today. I know that sounds really goofy, but back here in this time frame, even I got a loan that was no income, no asset. You just had to have a good credit score, and you could state your income, state your assets, and they would give you a loan. So that's something to just be aware of, that we're less likely to have a lot of foreclosures in this current market because people are better qualified. The loans are better done today. So, okay, what's going on with home prices? Well, the median sales price of home in the United States has been going up. If you look at the timeline here, homes are generally not going to get less expensive. There are times when there is a correction, when there's been a bubble, and then kind of over under here, and the same thing here, under over. So it just depends on what's going on in the market. But in general, we're not going back to 2010's house prices of around 200,000. We're not going back to 1975's house prices of about 35,000. It's just in general, houses are going to get more expensive, which is a reason to find a way to get into the real estate market if you can. Okay, currently the median income is not keeping up with the median home price because they are rising. The median income needed to afford the median home price U.S. home is about where did it say, 115,000. So sounds really high, but also we'll talk a little bit later. Wages have been coming up recently. So, all right, rates and home prices aren't the only problem. Taxes are higher because home values are higher. Insurance is higher because there are just the cost to rebuild a home when it has an insurance event is significantly higher than it was before. Also, people are building and rebuilding in these areas of natural disasters, and the insurance companies, for most of us, we've been kind of helping bear the cost of that because it's been more expensive to rebuild those. But there are a lot of insurers even pulling out completely of insuring homes in these areas. So that should help those of us not in those areas not have to shoulder that weight. We'll kind of see how that plays out. Also, property taxes are higher because there are more people using the services of a community, the roads and the schools and the water and all of those things. But they're doubled up in homes, they're multi-generational living, they're people living in renting basements and casitas and rooms and things like that. So in order to get the funds for the budget to take care of all those infrastructure items, the property taxes are also higher because of that. If there were more homes and more people in them, there would be more households that could share that tax burden. It might actually help lower taxes, but for now, they're on their way up. Okay, the median age of homebuyers are also older than ever. And that's because, again, that income, in order to get up to that higher income range where you can feel comfortable buying a home, right now you have to be older than you were before. And this is just the median. So again, half of them are older, which is also surprising, but also realizing half of them are younger. So, but that age has crept up from about 30 to 38. And then it kind of actually shot up just in the last few years because homes have become so expensive. All right, so what's going on nationally and what's the outlook? Well, again, getting back to that median homeowner buying the median home in the US, they're paying 42% of their income on home ownership costs. And that's not just mortgage costs, it's people who are renting too. Rents have also gone up. Housing is just expensive overall. And there's a lot of reasons for that. One is there are a lot of things that are part of housing that are not getting less expensive. The land, I mean, there are limited lots in the areas, the populated areas where most people want to buy. The labor, there's just, because they're trying to build more and more, there's a shortage of labor. There's talk of, deporting a lot of the skilled workers. That would make costs go up. There's talk about tariffs. Well, there are tariffs that will be implemented, and that will increase prices for materials, and that will mean again that there's upward pressure on that price for a new construction home. Also, the interest rates that builders pay in order to build a home is higher, just like ours, and the increased regulations as cities require larger minimum square footage and other regulations, that leads to higher prices. And I said it before, builders aren't going to sell homes at a loss. So how can the cost of a new home go down? Only if these things also go down, and that doesn't look like it's going to happen anytime soon on the horizon. So home prices should continue to see at least some upward pressure. Now, the number of recent home sales closing, they have been going up in the last quarter, October, November, December, up. I think it ticked down in January, and we have to see kind of what's going on this fall. But like I said, interest rates have been holding really steady in the high sixes, and they're starting to see some movement in the lower direction. We'll have to see if that brings a bunch of people into the market. I think it has to go quite a bit lower for a whole bunch of people to come into the market, but it's certainly not discouraging for them to have leveled out and to start to go down. Okay, so things are changing. Incomes are increasing. Price appreciation has slowed, and interest rates, well, they haven't gone down, but they've stopped climbing. And again, a little bit down in the last little bit, but there's always a little bit of variation in the 30-year mortgage interest rate. Okay, another silver lining, or I guess positive part of the economy, the average credit score of the American consumer, this was 2018, 704. Now it's up to 717. So people are paying their bills, and the credit score is high. Utah even higher at 731 is the average credit score. That's just incredible. I mean, congratulations if you're in Utah. I mean, people in Utah have good credit generally, so that's awesome. Rent is still increasing faster than the rate of appreciation. That's pretty normal. If you look at the 1990s, this blue is the inflation rate, or red is the rent rate, and that's been true in the 90s, the 2000s, 2010s, and then each year since then. You can see that inflation, although it's been there, the rent increase, and I know you guys saw this happen in these last few years here, how rent prices skyrocketed. And also they'll continue to, because any new investor that's buying property today has a higher interest rate, they have to rent it for a higher amount in order to make that cash flow. All right, let's talk about Utah's outlook. The population of Utah, there's a lot of demographics things we can talk about, but in general, the population of Utah is growing and has been for a long time. 6.9% increase last year. That accounts for new births and minus deaths. That's natural increase. So just births and deaths. We have more being born than are dying in Utah, number one in the country. Also, the annual population growth since about 1950 has been fairly steady. I mean, there's again up and down, but especially recently, 2007, 2008, boom, right at that 1.6%. And you'll see that it's really constant. So here's that growth again. There was a little blip up here in the 40s, a little blip down here where it's a little slower, and then a quick increase in the mid 90s. There are 3.5 million Utahns. This is from the Census Bureau, and over 1 million of them have moved in the last 20 years. That's about a 50,000 average per year for the last 20 years moving into the state. That's incredible. And here you can see that, like, it's like clockwork. It's very consistent, that growth. Little minor variations, but really just boom, 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 boom. And if that continues, we're projected to hit 4 million by 2034. So less than 10 years to get to the 4 million population mark here in Utah. Population growth in Utah and Idaho among the top in the country. There's a handful of states here. The U.S. rate is 0.5%. Utah is growing at more than three times that rate. This is interesting. 24% of those moving to Utah, out-of-state migrants, are returning to their place of birth. 24% of the people moving here to Utah were born here. So that's interesting. All right, jobs. Utah is one of the, Lawrence Yun called it one of the post-COVID superstar states. Not only did we handle COVID well, but we've bounced back. 13.6% more jobs in December than there were in March 2020. So Idaho just a little bit above that, but I think those are the top two in the nation. All right. And then the next one is the labor force participation rate in Utah. So historically, almost all through all time, there's one blip here in 1979 where we were about the same as the rest of the country, but we're about 6% higher labor force participation here in Utah. So Utahns work. That's super awesome. Other good news in Utah, the unemployment rate in Utah is lower than the rest of the nation. We're at 3.5, average is 4.1. So that's good news. And this is just another little blip. Utah leads the nation in innovation capital. It just means we start new businesses, we create things here, employment, productivity, lots of good stuff happening in Utah. Again, is that number one? Looks like, yeah, number one in the country in innovation intelligence. All right, talk about incomes. Utah's poverty rate is the lowest in the nation. 6.7 is bad. I mean, honestly, any poverty is bad, right? But compared to the rest of the states, lowest in the nation. So that's good news. The real median household income in Utah has surpassed, this is because it's census, so 101,200. It's actually higher than that today, but over 100,000 per household income in Utah. And as you can see, there are times of higher and lower rates of income, but generally, again, even if that was the low, we're way higher than these other times when they were lower. So in general, over time, your income should grow with time, and things should lighten up, especially again if you're a homeowner and you can build some of that wealth in a property. All right, Utah wage growth among the highest in the nation. 6.6% in Utah, 7.3% in Idaho. I think those are in the top four. Yeah, in the top four in the nation. So super awesome. Hopefully you're seeing your salary or wage increase by that amount. Again, that's probably median. So there's or the conglomeration of everybody. So some higher, some lower, but an opportunity again to keep your eyes open. I'm not saying quit your job and go get a new one, but keep your eyes open for opportunities, because again, the people who do that are the ones who are getting higher wages generally. If your current employer will match inflation or give you a raise, that's also super awesome. Stay there and work for them. Okay, this is a surprise to me. I did not know this, but the Utah median household income, third highest in the US. This is 2023, again, from the Census Bureau. So there is current data, but third highest in the country. The average 80,000 in Idaho, even 74,000. We're at 101. That's super awesome to be doing that well. Now we don't feel like we're doing that well, but again, we're coming from super low interest rates, lots of free flowing money to a tougher time in the economy. But overall, compared to the rest of the country, Utah is faring very well and has historically. So Utah and Idaho 2024 gross domestic product growth among the top in the country. And I think, again, Utah, highest gross domestic product growth in the country. Super awesome. Utahns are productive and we're economically diverse, which helped us through COVID and a lot of other things. Our economy isn't based on just like one or two industries. There's a whole plethora of industries in Utah, and that helps us through harder times economically than a state that everything is in oil or everything is in car manufacturing or everything is in something else. So that's really cool. Yeah, we got fintech and software development and mining and all the stuff. So Utah is a great place to be economically. Okay, U.S. inflation increased in December. It also increased here in the mountain region. But one thing to note, inflation in the mountain states is below that 2% target. So again, we're doing pretty good here in the mountain states. All right, talking about housing. Here's some downer news, or good news, however you want to look at it, but probably downer news for most of you if you're wanting to own a home. Utah is the 8th most expensive housing market. Now remember, we're the 3rd highest income, so you got to take that into effect. But all of these other states above are actually blue states. Utah is the first red state, and fairly expensive housing here in Utah. Okay, and this is the difference between, and I think this is, yeah, in Utah, owning will cost you more. And this may have changed. Again, rates change, prices change, rents change. This is a little bit old, but the median monthly payment for a single family home is going to be higher than if you rent. So you've got to consider, is it worth that? When do I make that move from renting into home ownership? And we'll talk about some opportunities to do that. All right, the house price index for Utah. Again, this just shows in general home prices. While there are little lulls here and there and even some bigger ones, generally don't go down. I was told when I got into this industry that there's not a 10-year period where house prices haven't gone up. And even if you look at, if you were to buy at the peak here in quarter one of 2008, you're at the bottom of the drop in quarter two of 2011. And then, so 2008, before you even get back to, this isn't interactive, but you're about 2016. So 8 years, and then you're back on making more than you paid. And again, if you were to follow this trend, you can see that the home price growth, even where we're at, may not be too far out of whack as long as those incomes can come up. And again, if interest rates come down even more, I think housing will feel more affordable. It'll be more affordable if those interest rates come down. Okay, there is definitely a housing shortage in Utah, and single family permitting. So home construction is actually down since pre-COVID. We're down 12%, even though we're building like gangbusters. We're just not building enough for the amount of people moving in and for the amount of people that need housing. Home price growth in Utah, fairly stable here, right around that 4%, 3 to 5% range. That's kind of a normal. You want to trickle up. You want appreciation to rise at about that rate. You don't really want to see the crazy high and then the crashes. If we could just chug along at 3 to 5%, that'd be fantastic. That'd be great. And Utah generally does. We got sucked into some of the national things because of the low interest rates and supply and demand and other factors. But in general, Utah is a fairly stable housing market. Okay, the market has slowed down in the last bit. Since 2013, average days on the market, you saw it less and less. I mean, there's so much competition. This says 6 days. I'll tell you, a lot of the good homes on the market in 2021, you had to be out there that day and make an offer on it that day, or you weren't going to even have a shot at getting that house. And luckily, things have slowed down. The average 30, I think now in 2025, the first part, we're probably up closer to 38, which is about the median. Yeah, the historical average is about 38. So that's a kind of a normal, steady, fair market. So that's good news. You don't want to be rushed. You don't want to overpay just to get something. This gives you an opportunity to look at other houses, to do your due diligence, to not feel rushed or coerced into buying something and potentially making a mistake. So a slower market is good for you as a buyer, and also probably even for sellers to have a little more time to figure out all of their things. People were putting their homes on the market expecting, a 30 or 45 day period, and things were going that day even sometimes. Okay, this is just a little tidbit of advice that I have for potential home buyers. If you can't afford the median priced home, buy a home that costs less than the median priced home. By definition, about one half of the homes cost more, one half of the homes cost less. So look for, if you can't afford the median one, that's what the headlines are always going to be talking about: median home, median income. Well, you're probably not the median income and the median home. Maybe you're the median income, but that means there's still half of the homes that you could buy that are less than the median home price. So get together with an exclusive buyer's agent or a lender who can help you figure out if there's a plan that you can put in place to get into homes. One of the other things, again, this carries over from last year, you do need to adjust your expectations. Starter homes are a smart way to get into a home, to get into the real estate market and accumulate and build wealth. But a starter home is usually not. So again, there was that time period where it was potentially, but it's not usually a 3,000 square foot home with a 3-car garage and 6 bedrooms and 3 bathrooms on a large lot in the most desirable area. You've got to think big by thinking small. Starter home construction, this is how the U.S. Census Bureau and Freddie Mac define starter home: below 1,400 square feet. I'm not saying you need to buy one that small, but certainly we can help you find things in a smaller size and a smaller price. They're out there, a lot fewer than before, about about an eighth less than they were before, but they are still out there, and there are ways to get into them. I just wanted to point out, when I bought my first home, I mentioned in 1998, interest rates were about 7.25. They're about 7.25 today. They're actually less than that. So the difference is, looking backwards, that was a good rate. And when you're looking backwards, you're saying this is ridiculously high, terrible rate. So again, hindsight is 2020. If you buy now and rates go back down, that would be great. If you buy now and rates do go back up, then you're going to be glad that you bought when rates were low. So things are not much different. It's hard to time the market, but again, looking at historical trends, these rates were artificially low for an extremely long period of time. We'd probably feel healthier if this had kind of just dipped down a little bit lower, but not that low, and then kind of came back up. It would have felt a lot better, and prices on homes would have been lower because there wouldn't have been this massive competition because everybody had easy money. Here's an example. My first home had no garage, no sprinkler system, no air conditioning. It had an unfinished basement. So I was only getting about 1,000 square feet. When I bought my home, it was priced below the median home price. I had friends who opted for even less square feet, about 1,500 square feet. They got one of those split levels with the garage, a 1-car garage in the bottom half or the bottom section. And even they were like 1,500 total. But that's a starter. Those are starter homes. What people have been buying in the last 10 years have not been either a typical starter home. You ask your parents and your grandparents what their starter home was like. And that's what, if you want to get into the game and you can't afford to get in at the higher level, look at starter homes. It's a great, smart thing to do. Those bottom end, starter homes, that bottom end of the price, that does tend to, even in a harder market, tend to hold its value a little bit better than the ones at the higher end. All right, here's some good news. There has been a significant change just between February last year and February this year, a 30% increase in active listings for sale. So that means you have, again, more time to consider it. You can make lower offers. You can ask for concessions, and you can ask for, here it is. So 10,000, what is normal? Normal is 30 to 45 days on the market before a home goes under contract. 10,000 homes to choose from instead of 1,000, and again, your budget's going to constrain that. So, I mean, essentially 40 homes to choose from instead of 1 or 3. Buyers have options. You can take it a little bit slower. You can make offers. You can ask for closing costs and home warranties. You're able to have time to do your due diligence and your inspections. And then if there are issues, you can ask for repairs. These are all good things for buyers, and it's closer to a normal market. Little tidbit, the housing market, this has nothing to do with the housing market. The Utah retirement age population, those 65 and older, is on the rise. I just found this, so I thought I'd throw it in here. Utah has the second lowest rate of primary care providers. And we also have a growing gap because our population's aging and the number of geriatric physicians are not increasing at the same pace and not expected to continue to increase at the same pace. So there's kind of an opportunity here. Maybe if you're in med school and you want to live in Utah and you're interested in helping the aging population, that might be a really good spot to look at. So I just thought I'd throw that in. Maybe somebody will see that and it'll benefit them. Okay, so the current market highlights. Wages are increasing. Sellers are more negotiable today than they were in the last 5 years. Interest rates have peaked, stabilized, and may go down. Now, I don't mean that as a guarantee. Rates could go up as well. But essentially, the picture is that they kind of hit their max there around 8%. They came down into the 7s, and they're currently just under 7 and kind of hanging in that range. May go down, okay? If it makes sense, buying now and refinancing later might be the play. If you, again, as I said before, if you can afford it, if it makes sense and you can afford it and you can get into something that you can afford now and rates go down, then you're going to get equity from the competition and the price going up if you decide to sell, or you can refinance if the interest rates go down and just take that monthly payment that you have and lower it, in some cases significantly. Every house that I had, again, you saw when I bought, the rates continued to slightly get lower over time, and we refinanced multiple times, and our outlay, I mean, we saved hundreds of dollars, and we just put that against principal to build more equity, or used it for other investments and things. So that's cool. The reason why buying now and refinancing later might be the better option is because lower rates will mean more buyers in the market. More buyers in the market means higher prices. So you're mathematically better off if you get in and then you lower your payment versus if you get a lower rate but your payment is higher and can't be lowered because the price that you pay is significantly higher. Okay, Josh Romney from Intercap Lending says housing is a very good investment right now because of restrained supply. The odds of housing prices going down significantly in Utah are very slim. So just a note, and then just another quote by Warren Buffett: be greedy when others are fearful. It's normal to feel some trepidation about buying your first home. I did as well. It's a leap of faith. It's always a little bit of a stretch for you to jump, and sometimes a bigger leap than others to jump from renting to home ownership. But again, if you're going to be in an area, you've got a steady job with a steady income that's likely to potentially rise over time. If you know you're not geographically needing to relocate, buying a home could be is usually, again, statistically, a very good way to start accumulating wealth and building equity that you can use. Again, I've bought multiple homes and we've moved a couple times, and we were able to take that equity from the smaller home to buy the next home, take the equity from that home years later and use it for our next home. And it's been a great way. We wouldn't be in the house that we're in today if we didn't buy that first starter home when we did. So okay, 5 current market takeaways. Housing isn't getting significantly cheaper. There's probably not going to be a crash. There's too much demand. The cost of new construction can't go down. I mean, it could, but is it going to? Highly unlikely in the current climate that we're in. Buying before rates go down. We talked about that. Refinancing if they do, or just being glad that you got in at today's rates if they don't go down and they do go up. Another takeaway, Utah is one of the best places to own a home and to live. If you looked at those places where we're leading the country, specifically economically, but I mean, we've got a lot of things that we can do here. We've got outdoor recreation, we've got higher education, we've got a lot of things going on here in Utah. So super awesome. And last takeaway, get an agent on your side. If you're thinking about buying a home this year, you want somebody who's going to have your best interest in mind, not somebody who's just going to sell you something. So call me for a free consultation. We'll sit down. We'll talk about what your needs are. We'll put you in touch with some lenders who can run some numbers. We'll look into grant programs. We'll look into loan programs that can help you get into the housing market if that's what you want to do. But again, if it doesn't make sense, we're gonna help you do whatever does make sense and put a plan together for the future if it doesn't make sense to do it right now. So once again, I'm Ben Clark, Principal Broker of Homebuyer Representation here in Salt Lake City. That's what I've got for you. It's a wrap. Our website is homebuyerrepresentation.com. We will be having some first-time homebuyer classes this year. We've got one coming up in a little bit, so message me if you want to go to that, where we can sit down and actually talk about how to get you on the path to home ownership. So here's the sources that I use for this report. Very grateful to all of these economists and analysts and professionals who have put the legwork and the time into gathering this research and putting it into a format that we can enjoy and that makes sense. Thanks again. Again, I'm Ben Clark, Homebuyer Representation. Shoot me a message, visit my website. Happy to see you, happy to help you, and good luck. Thank you.